This scalping strategy made over $7,000 in only 6 days of trading. And in this video, I'm going to show you exactly how it works so you can replicate the same backtest and get your own results. And to give you a bit of context, we are going to be trading on gold, okay? And here a small disclaimer. Gold is a really volatile asset, and obviously it can lead to losers if we don't know what we're doing. And that's why back down in the description you have a nice discount coupon for Forex Tester Online, so you can try this strategy or any strategy out, and this way you can avoid losing a lot of money in the markets and obviously get yourself prepared so when you enter the real markets you do have a plan. But let's dive straight in. Like I say, we are on gold and we are going to be in the 5-minute time frame, and this obviously we can change. We can go to the 1 minute, to the 50 minute, to the 30 minute. That's no problem, but I feel comfortable in the 5 minutes, especially with this type of strategy, because obviously the 5-minute candles give me a lot of information that maybe I can lack on the 1 minute time frame, or if we go high, maybe to the 30-minute time frame. Now what we need to actually do is come to the London Open, okay? And in Forex Tester Online, we can just go to an open session, and this will take us straight to the London Open, okay? And now basically we are going to add the psychological levels. Psychological levels are basically the levels of the round numbers of the price, okay? And this strategy especially works on gold or on stocks, okay? Because basically if we go to Forex, the round number isn't so important than on an actual real asset like it would be gold or any type of stock, because at the end of the day gold is bought by millions and millions of people, and people love buying at round numbers, okay? Buying and selling, okay? There are psychological levels where people just hold and wait until it reaches that exact number to actually sell. It's a bit silly, to be honestly, but that's how the human being works, and obviously this is the edge where we can actually make money. So basically what we are going to add is the psychological levels. For this reason we can use support and resistance or moving averages or whatever, anything that can suppose an actual support or resistance for the price we can actually use. But I personally love using round numbers, especially for this type of strategies, because at the end of the day they are universal levels. I don't have to find the levels, and obviously this gives less human errors. So basically what we are going to wait is for the price to hit this round number, and as you can see these round numbers are every $10, but we could change them. We could add them every $20, every $100, depending on what type of strategy you actually want to use, especially if you want to go more into swing trading. But for scalping, every $10 for me is a great start off, so basically I used it here. Now what we need to understand is the context of the market when it approaches these levels, okay? Because basically if we don't have a context behind, we won't actually understand why the movement happens. Obviously it's not going to happen every single time, it's not the holy grail, but we have higher odds that we can get a movement that we expect when we wait for these type of setups. And here I want to refer, there's a saying in trading that is the wicks don't lie, and this is true especially when we come to this type of strategy, because at the end of the day when the price approaches one of these levels, if it gives me a nice wick and another confirmation, it gives me higher odds that maybe I can get a retracement or get a nice move between the levels, okay? I'm not going to go for a really high risk reward. It does give sometimes higher risk reward because our stop loss can be quite tight, but I'm just going to always tend to go to the next level, because at the next level I don't know if it's going to retrace and go back to my entry point. So at the end of the day I'm always going to go on the most secure side, and this way basically I'll be less exposed to actually hit a break even or whatever. So basically what I'm going to do is I'm going to wait for the price to approach the level, and here I've got a great example. Why? Because the price approached the level first time it's approached since it came up here, okay? Same happened here, but I have but this one is a bit different, because here the price didn't manage to even resist 5 minutes below this level. What does this mean? It's when we combine time and price, okay? When we combine time and price we can see that it's got volume, and even if we look at the volume down here we can see a spike. Obviously these are CFD volume, so it's not so relevant, but we can see a spike in volume. I didn't even look at that, and the most important is that the price didn't manage to stay below. And what happens after that? 5 minutes later, okay, in a total of 10 minutes the price has not resisted this level, and as well I got a second candle that has broken the high of the candle that reached this level. And this is basically a complete volume shift where we can see that the buyers entered completely at this level and they changed the total momentum. And this is the important part, because here is where I can expect the price to actually reach this level. I'm not going to aim for this level or any above. I'm going to go to the next level because I don't know if the price can retrace here again. We could refer in terms of if we don't get the same setup when it reaches the same level, we could hold the trade a bit longer. We could do that, but for this backtest, for this strategy, and how I like to do it is always to leave as soon as possible when I've got enough profit. But what happened here? Basically here we could see that the price approached the level, we got a small wick. If we would have a red candle here, it still would be valid, but the second candle broke through and it closed above this level, meaning that there was still some buying power and it could lead for the price to actually continue going higher. So basically this is the actual context that we need to understand, and that way we can read the markets easier, because at the end of the day, if we understand why the price is doing certain movements, then we can try and predict at least the next few candles. But let's go ahead and see a few live examples where you can see the price actually touched the level here, but it broke through. So we forget about that level and we'll just wait for the price to give us our exact setup, because that's where we know that actually the price is having some type of shift in terms of trend or volume. Okay, look at this. Right now, this isn't a setup that I would probably take because the price hasn't entered enough down to here. So obviously I don't have all the odds on my side that I can actually reach down here, but it happened exactly the same. It broke through, it came up again, it didn't manage to stay above this level, and then it gave me a complete volume shift coming down. But here's two things missing. It didn't come down to this level down here. This is one requirement that I always like to have. And as well, this red candle didn't shift this low. What we could do here is basically leave a sell stop down here, but obviously I'm not going to do this because it's not my exact setup that I like to trade. So I'm not going to do it, but we could leave a sell stop, and that way only if the price comes down, I would enter the trade. If it would go and close above, then obviously I would take the sell stop away. But let's see how it works out, and there we can go. It would have actually broken down and it would have come up to our stop loss. So this is why obviously I like to have the complete picture in terms of the price comes to the level, retraces, doesn't close above, so meaning that there's not enough buying power to close above, and then it gives me a red candle, especially an engulfing candle that overlaps this candle that actually approached the level. But let's see if we can see any other examples so you can actually see how it works. Okay, here we have another nice example where the price basically approached the level, didn't manage to stay above, and it gave me a huge red candle. The problem here is that actual red candle has already hit this level. So here I've got the setup that I actually like. I really like this red candle, but I would now need to go to this level down here. And this is a risk that I personally would take. So I am actually going to enter a sell here so you can see how it works. And the stop loss, I am going to put it above the green candle, okay? Because this is basically the maximum that the buyers actually managed to get. So obviously it's where I could actually set a protection, especially it goes above this psychological level. So I'm going to set 1% risk, and my take profit is going to go to this one down here. This is not my favorite setup because I like it all to happen in between the two levels, and I can actually target this level because I have higher odds that it actually comes to this level. I don't have so high odds that it comes to this one, but like I say, it's a risk that I would actually take because I like this really big candle. We could have some retracement to fill this gap here, but in any case, it looks like a good setup. But finally, it hit the stop loss, and now I've got the exactly same picture, but in a different way. Price approached again this level and retraced again. So here I would enter another trade because this is the actual setup that I actually look for. And this one as well gives me a higher risk reward. Okay, in this case, the first one was a risk reward of 1-to-1, and this one is a risk reward of 1 to 1.5. So this is great, no problem. We've hit the stop loss, and now we'll just continue looking for more trades. Got a nice retracement here, and the second candle retraces as well. but the third one doesn't. And here another important thing is that I only trade a level when the first candle doesn't manage to break through, and then I get an engulfing candle. If this happens here, like I got 2 spikes, that means that even if the buyers haven't actually made it through, there's still intention of it. So obviously if there's intention, they probably managed to go higher up, and it doesn't mean it's going to reach this level up here, but it can probably reach my stop loss, and obviously this is what we want to avoid. So let's see if we can find another trade here. This is another perfect example. The only bad thing of this trade is that it takes my risk reward just a bit lower than a 1-to-1. Okay, so we'll be looking here at a risk reward of 0.5 to 1, so it's not the best risk reward, but hey, it's a trade, it's profit, and we can go for it. So there we've hit the first take profit. Shame that this didn't retrace here a bit more. And another thing as well, if we see that this, let's say that this candle didn't actually close below this level, and the second candle goes below and retraces up, here we must be careful, because what it means is that even if the price hasn't closed below the level, the actual intention of the price is to go lower, okay? And this, like I said before, it doesn't mean it's gonna hit this level right there, because at the end of the day, we don't know if it's actually gonna come to this level, but there's high odds that it could come back to this one here. So we always got to be careful with that type of setups, because I've seen it happen a lot of times. But in this case, we can see that I actually hit the take profit, and as well, we have another nice setup here where we have a nice rejection completely in, and it all happened in one candle, so that means there's even higher volume. So here we just set our stop loss just here above, and our take profit just down here, just for a risk reward, just for a 1-to-1 risk reward. That's fine, that's no problem for me. And it looks like it's retracing back up. Okay, there we hit the stop loss, no problem at all. Another thing that we can do is set a break even when we get certain profit in amount, when we get certain amount of profit, but obviously this will have to study it based on, let's say, 500 trades and see if the break even actually can help or not. But let's seek for the next trade, and as you can see, this one actually approached the level and it hasn't gone through, so that's why I'm not going to take it, because I always like to see the price actually go through and come straight back down. So let's go a little bit forward to see if we can see any other setup. And here's another example that I don't like to take, is when the price actually closes exactly on the level, because it means that basically the only thing that has changed here is the actual candle, okay? It doesn't mean that the volume has actually shifted, because it's just a coincidence that the candle closed straightly when it hit the level, and that's why it maybe didn't close above. So that's why I don't take these type of examples as well. You can see the price went straight up again. But let's see if we can find another good example. Here we have a nice example where the price has come down, nearly reached this level down here. So I could take this for valid. And then I've got a nice retracement where the price literally approached and went straight down. So here I'm going to enter a trade. I'm going to put the stop loss just here, and the take profit, I'm going to bring it down here. And this is giving me a positive risk reward of nearly a 1-to-3. So perfect. We need a 1-to-3 to sort out the situation that we have right now. So let's see if we can actually take profit. Perfect. And now we've got the exact same setup where the price has come down and the wick is enormous, giving me a really small body. So the only thing now that we can see is that the candle isn't green. So now we need to wait for a green candle. And here I can see that there's been a lot of intention of going up. It's come back down, but this isn't actually bad, okay? If the candle would have closed red, then maybe we could still be thinking to avoid this trade, but how it actually closed green, this could be a nice push up, because we actually have intention, or the price has an intention of going higher. So I'm going to enter a buy just here, set the stop loss down here, and set the take profit just here above, and our 1% risk, and let's see how it performs. So it's coming straight down, nearly hit the stop loss there. Me personally, if I'll be live in trading, I would have closed this at break even, because it virtually didn't hit the stop loss because of 1 pip. But let's see how it performs. It looks like it's going up. Perfect. We hit the second take profit, and we now are sitting with a 2% profit on the account. And now let's see if we get a green. Nope, we didn't get a red candle, so we will avoid the setup. And let's see if we get any other to actually showcase the strategy. So there we have exactly the same. But what I don't like of this setup is that it didn't actually manage to go below this green candle, meaning that the volume wasn't enough, and this could lead for the price to actually come maybe up to here and then go back down again. As you know, it doesn't mean it's going to go to the next level, but it could hit our stop loss. So I'm going to avoid this one, but as you can see, nicely came down, touched this level down here, and now we'll just be seeking for, oh, this is quite close, I wouldn't take this one, but it's a shame because it gave me a green candle. But there we can see we've actually hit the stop loss, and like I say, I only like to use the first approach of the price to a level. Okay, so this one wouldn't count because it actually can go through, but when it comes back down again and it goes through, this is the first approach to the level. If the price comes back down and spikes up again, I'm not going to try and find a setup there, because based on my experience, when the price approaches a level and its intention is to leave, it will never approach the level again until it's succeeded wherever it needs to go. If the intention for the price is to come back to this level up here, it won't retrace back to this level. Once we get a spike, if there's enough volume, price will go straight up. That's why I set the stop loss just below the actual candle that spiked through the level, because basically when it hits it the first time, it's not going to come back again. But let's see if we can find some more trades. Another backtest has come to the end. Tons of trades in every single day, because obviously we're in 5 minute, and the trading setup is really simple, so we get loads of trades a day. And as you can see, it made over a 70% gain on the account. With a 10,000 account, we managed to get $7,000 in only 6 days. So this is a really amazing result. But like I said before, and big disclaimer, this strategy isn't a strategy that you can actually pick up and trade from day one. You need to practice it, and that's why you got a discount coupon in the description, so you can practice it, get enough trades, and make, like I say, 1,000 or 1,500 trades in your backtest, so you can actually master this trading strategy, see how the trade performs, see what trades you shouldn't take, because obviously I can't just take out my experience and put it in your head. You need to do it yourself. You need to get your own experience, and the best way to doing this is obviously backtesting. So let's go to the analytics so you can see more or less the report. Here we could use as well the exit optimizer. Right now we're using different sizes of stop loss in terms of pips for every trade, because obviously we don't have a fixed rate. And what we could do, and it's quite interesting, that the net profit here is $9,700, so this will be a 90%, nearly 100% gain instead of a 70, just by using a fixed stop loss, a fixed take profit, and the max holding duration of 22 minutes. So this is something that we could consider. And as well, in our analytics insight, we could consider increasing the position size after winning streaks. If we enter, we can basically see that the best one would be a ×2 after 2 wins until we actually lose a trade. This would improve our net profit by 60%. So if we combine this with the exit optimizer, we could improve quite a lot this strategy. So hey, that's something that we should take in consideration, because using a fixed setup, we would have a 5.29 profit factor. That is massive, because just now we have a profit factor of 3.75. That is still massive, but obviously this would give us even higher profit. As well, what we could look at is our average profit versus our average loss is just below a 1 to 2, okay? But the most important is that we had a 72% win rate, so this is quite high, especially for this risk reward. We made 50 trades in these 6 days, so it's nearly more or less 8 trades a day. That is quite a lot. And if we look at the actually equity chart, we could see that it's just going up to the moon. Okay, obviously we've got some drawdowns here, but I mean the max drawdown wasn't too high. We're looking at a 6.8% max drawdown and aiming at a 70% in profit. This drawdown is nothing. Okay, so basically these are the results that this strategy gave to me, because obviously I have a lot of experience trading round numbers. You can trade it with support and resistance, with moving averages, whatever you're comfortable with, but the most important is that you backtest it and get your own results, because that's the only thing that you can rely on when you go into a drawdown streak in the real markets. And said this, I hope you've enjoyed this video. Now it's your turn to backtest this strategy in Forex Tester Online, and I would love to know back down in the comments the results that you get, because obviously every feedback is always welcome and I read every single comment. So as always, my name is Jack, I hope you're all good and I'll see you next time.